Your powers are weak, old man.
You can't win, Darth. If you strike me down, I shall become more powerful than you can possibly imagine.
Bitcoin took a big surge, didn't it? Yeah, it went way up. Now it's going down, 40% collapse. Right? So the question is, why is it going down? Well, I'll tell you why. Because China, one cause, China said they will not allow private digital currencies. Oh, in other words, they won't allow crypto speculative investing. China is focused a lot on trying to deal with its financial speculators. They've been focusing on that for some time, trying to keep them in check, right? And because they create instability. You know, had a problem with speculators and the housing markets in China. They tamed them to some extent, and now they see this emergence here of financial speculating in cryptocurrencies and Bitcoin, and they're nipping it at the bud, you see. But they're also nipping it at the bud because China's central bank, People's Bank of China, PBOC, right, is trialing and is issuing its own official government digital currency. If they're going to do that, if the central bank's going to issue its own digital currency, why would they allow private competitors in digital currencies? They won't. That's another reason why China is recently announced, won't allow private digital currencies. Well, that means what? In China, the demand for current DCs is going to fall and is falling. Well, reduced demand, what happens to price? Price falls, right? That's what's happening. So, but what are the reasons other than keeping in control private digital currencies like Bitcoin? China's central bank announcing it is going to is trialing right now, is going to issue its own official China digital currency. Right? Why does China want to do that? Well, let's dig deeper. China wants to do that because it has certain advantages in its competition with the United States and Western financial imperialism, right? Based upon the dollar, the U.S. dollar, the global currency. It's the foundation of U.S. economic imperialism. Yeah. Well, part of the dollar dominance is the U.S. control of what's called the International Payments System. That's called SWIFT, SWIFT. It's an acronym, the SWIFT Payment System. Through the SWIFT Payment System, the U.S. sees all dollar purchases around the globe that are happening. It can see these purchases going on, because the dollar is the U.S. currency, and the U.S. government and U.S. banks have this system called the SWIFT International Payment System, where they can identify all payments in dollars going on around the world. Well, the SWIFT system is, like the dollar, a key to U.S. economic imperialism. How's that? Well, if the U.S. imposes sanctions on anybody or country, it can see if they're violating the sanctions through the SWIFT system. Well, you know, China and Russia and others want to get out from under that payment system and out from under relying on the U.S. dollar as the main trading currency. So there's a possibility using digital currency that they can do that. That's a positive reason why China is issuing its own government digital currency. Not just controlling of Bitcoin and it's excess speculation, but there's positive advantages for China to do that, right? It's also a way, if it can issue its own digital currency, China can eventually provide money, digital money, to countries in competition with the IMF. You know, when countries get in trouble, the IMF bails them out, gives them dollars, like Argentina, $65 billion. Well, that's not only economic but political control, right? Well, if they have their own alternative digital currency outside the dollar system, you know, they're going to be able to do that too, right? So these are the causes underlying supply and demand, right? China's announcement about its own official digital currency has the effect of compressing demand for Bitcoin as a risk-taking financial investment. Okay. Now, the other thing that's depressing Bitcoin and cryptos is the fact that the Federal Reserve and all central banks are going to move towards their own digital currency issuing, no doubt. And the Fed has recently announced a study, which is always a preliminary for the Fed issuing its own digital currency. Digital currency means if the Fed issues digital currency, there's more supply of digital currencies out there. Again, increased supply, down goes the price for Bitcoin, right? And, of course, it reduces the demand for Bitcoin because some investors will buy the official U.S. digital currency. So supply and demand abate the price, you know, when there's no competition, you know, from the government with its own currency. Of course, Bitcoin prices tend to go up. Now, another thing that's depressing Bitcoin is when the Federal Reserve plans to issue its own currency next year, or pilot it at least, that means it's going to regulate all digital currencies. Regulation means that, this opaqueness in these markets for cryptos is going to go away. And that regulation is the first step towards taxing. And the U.S. Treasury has announced plans to tax high-volume crypto Bitcoin trades. So if it's not opaque anymore, right, it's more transparent, it's more regulated, it's taxed, it has competitors in real government DCs, well, then all of that's mitigating against price upward mobility in Bitcoin. And all that's hitting at once, you see. All that, the regulation, the taxation, the central bank digital currencies, and all of that is causing the digital currencies in Bitcoin to be under pressure, and the bubble in price is beginning to unwind. Okay, so that's what you got to understand here. Regulation is coming, taxation is coming, competitive central bank DCs are coming already here. Big motivation for China to step out in this lead to get out from under U.S. economic imperialism to some extent, the SWIFT system, the dollar reserve trading currency, etc. Now, all of this has had the effect of some who've been private investors like Tesla's Elon Musk, who've been jumping on the bandwagon here. And every time they announce they're going to buy digital currencies, well, that has a big demand effect, right? Oh, well, if Elon's doing it, we should do it too. It legitimizes it, right? And no doubt, you know, high risk taker, Mr. Musk, we know he's a high risk taking capitalist investor, right, from his other real investments, you know, high risk on Bitcoin here. He turns around and reverses himself. Oh, okay, maybe not, right? Well, you know, that has the opposite effect of boosting the demand for the market. Well, why did Elon do that? Well, China announced it's not going to tolerate private digital currencies. And we know Elon wants to produce most of his cars, manufacture them in China, so he better get on board with China. And he reverses his position on this, you see. A lot of flux going on here, affecting demand up, demand down, supply up, supply down, politics behind it, imperialism and the fight against imperialism behind it, regulation, taxation, control of the money supply. Well, a lot of the Bitcoin and crypto stuff is being money laundered sources here, and to the extent it's opaque, money launderers prefer it. A lot of dark money involved with this crypto stuff. But if you're going to regulate it, you're going to make it more transparent. Away goes the opacity, and the money launderers go hide somewhere else, right? Demand drops. Okay, so that's what's going on with the Bitcoin and cryptocurrency volatility going on now. But the long-term forces, to sum up, are clearly against continued price appreciation for Bitcoin and the bubbles. There will be periods of fluctuating up and down. But once the taxation occurs, once the regulation occurs, once the competitive central bank versions come out, that's going to strongly mitigate against bubbles. And a lot of day traders in cryptos and Bitcoin are going to lose their shirt. A lot of them already are, right? But that's what you get for high risk capitalist financial asset investing, right?